Joining us to discuss this and what's driving retail momentum and the latest consumer trends and why retail spaces are hotter than ever is Hessam Nadji. He is the CEO of Marcus & Millichap. Good morning, Hessam.
Good morning. Thanks for having me on the program.
Absolutely. So with holiday retail sales forecasted to increase by 3% this year, how do you see this impacting retail and real estate demand and investor interest?
Well, with retail, you have to go back 15 or so years when e-commerce created such a major change and reimagination of brick and mortar retail. With a lot of older shopping centers becoming obsolete, a lot of local retailers going out of business. And this industry has been through a lot of turmoil over a long period of time. There's been very little new construction of shopping centers or fast food retail or drugstores. The supply side pulling back has given the market time to recover. And then the reimagination of retail. So many of our clients across the country have bought old, tired shopping centers and basically revitalized them. And the trend is all about fun, food, and fitness. And those things are driving foot traffic, and retail has now become a favorite asset class within commercial real estate. So the holiday season at a 3% forecast, that's a little bit tepid. We expect a little bit more enthusiasm from consumers. Consumer confidence is high, income levels have gone up, and I think there's a little bit of a relief from the election outcome. So I would expect a little bit better than 3%, but brick and mortar retail is certainly back.
I do want to dive in a little bit deeper here when it comes to the brick and mortar space, especially when it comes to sales. And, they're gaining momentum, as you said, and online retailers are expanding into physical locations. But what other trends are you seeing in leasing activity and tenant types?
What's amazing to see as an investment class, you have to remember commercial real estate has been a favored investment class for a lot of private investors, individual high net worth investors, and institutional investors like pension funds, for example, or publicly traded real estate investment trusts. And what they care most about is operating income, cash flows, and occupancies. So within those parameters, shopping centers have done a phenomenal job, along with tenants, to reduce basically the floor plate of a retail store, with less inventory in the store, more emphasis on connecting with the consumer, and having a cheaper way to essentially manage inventory. So even though that shrinks demand for space, it makes the retailer a lot more profitable. It makes the longevity of whatever brand we're talking about a lot stronger. And that's why a lot of digital native brands are starting to open stores to connect with the consumer.
And experiential retail, as you mentioned earlier, from gyms to unique entertainment venues, that continues to grow. But how is this shift influencing the types of retail properties investors are prioritizing?
It's amazing to see how, for example, to your point about what draws consumers into a shopping center, the hybrid work environment, the reluctance to go back into office space has created more demand for coffee shops or hangout places in shopping centers where people get tired of being home, working virtually, and therefore they're hanging out more in what would be a typical retail outlet. That drives traffic. While you're there, you're probably going to shop for something else or likely to have lunch at a restaurant. So there's a lot of side benefits to some of the trends that we're seeing, both in inventory reduction and the kind of foot traffic that is happening now because of the modern workforce. And people are eating out a lot more.
Yeah.
Restaurant and bar sales have exceeded grocery sales for several years, which means people are on the run and therefore are out and about spending money.
Yeah, you bring up a good point when it comes to grocery anchored centers, sort of like a one-stop shop, so to speak. People go there to pick up their groceries or maybe run a few errands in the meantime, like having a FedEx or a UPS in there, while also maybe, getting their nails done or something like that. But it's also impacting neighborhoods. Power centers now are outperforming. So what factors make these specifically so attractive to investors right now?
It's amazing to see the draw of value retailing. When you have a Costco, when you have a Ross Dress for Less, and other value-oriented retail, that draws foot traffic. That is a huge benefit to other retailers within the same shopping center. We're also seeing a big comeback in urban infill on anchored centers where you may have a dry cleaners or, like you said, a beauty salon and so on. Especially if you do have an anchor like a 7-Eleven, the consumer draw into those shopping centers have actually, really recovered over the past 5 years as well. So we're seeing demand in, both the value side of the equation. Luxury retail has done extremely well. There's a little bit of slowing in that as the effect of the stimulus sort of wears off and consumer savings go down a bit. But nonetheless, overall, brick and mortar retail is doing very well.
There's a lot to look out for. Again, thank you so much, Hessam Nadji, CEO of Marcus & Millichap.
Thanks for having me.